basically this just gives you real-time analytics for crypto vol, right? And it basically tells you what's going on in vol. So here I've got Bitcoin. If I expand this, so you can see this has got a chart of what the at the money vol's doing in Bitcoin on different maturities. So I can zone in on the 30-day. So that chart shows you, you know, for the last month, what has at the money vol done in Bitcoin, right? So the highs of it have been 140 odd. The lows have been about 95. So that's a pretty wide range for implied volatility, right? So when you're buying an option, you're buying implied volatility. So you need to keep an eye on where this vol is when you're deciding to buy an option. If you buy an option when vol's at 140, whether you're right or not in the spot price movement, you might get killed in the vol movement, right? Because the vol collapses, yeah? So you need to measure where's the vol, where's it been, where can it go, basically, right? And that's what these sort of charts allow you to do, because they allow you to monitor what vol's up to and what it's doing, basically, right? So these are, and you look at here, like there's the 180, the 6-month vol is getting creamed, right? It's like every time it rallies, it gets smacked back down, and now it's at the 1-month lows at like 90, right? But if we go back to 3 months, then you could argue it's still expensive, right? Because it used to trade down at 60, right? Back in sort of late last year. So it gives you context of where this vol has been, where it can go, what are the ranges, what are the extremes, basically. And once you understand that, then you consider that in the type of positions that you put on. Make sure they're not too long vol, or they're not too short vol if vol is cheap, stuff like that, basically, right? So that's one thing to keep an eye on. So really good website that I use a lot. It's also got things like skew, which I'm not going to go into explaining. It's got term structure, which is the price of different maturity options relative to each other. So it's got a hell of a lot of data. But other than just the volatility data, it's also got activity data, which is very powerful, right? So it tells you where the action is. It tells you what strikes are people buying, right? What maturities are people buying? You know, where is the interest, right? So I can look here and I can see very quickly, like today, the daily market activity was pretty even between, you know, buying and selling puts, buying and selling calls, right? There was no dominant trade that people were doing, right? But I can say, you know, next week's options, right? We said 26th of Feb. Where's the open interest? Where's the volume, right? So the open interest on the 26th, right? Where are the big bits of open interest, right? So there's the 48 calls, 56 calls, 64 calls. So there's a bunch of open interest. That means someone has traded the 64 calls in 3,000 contracts, right? So there's an open position up there in the 64 calls. So it's just telling you where the street has got its positions, so you're aware of the potential activity that's going to take place in the options market, right? It's not like it gives you an exact formula for where we're going to go and when we're going to do it. But what it does is it just helps you. It's another piece of the puzzle, right? It helps tell you where the flows are, what people are buying, what people are selling, where the positioning might lie, basically. And that's what the idea is, to kind of watch that, monitor that, to get a feel for what people are doing. And like I said to you, in January, it was very, very clear that there was a big fund or whatever that had bought the 36,000 calls that expired in Jan. The market burst through them into the 42 area. The guy sold them, made like $40 million or something insane, right? And then he spent about 5 million of that in higher strikes in January.